Alright guys, welcome back to my YouTube channel. So this is going to be a quick review, another quick review for my study playlist of every trade I take, more like logging and journaling my personal trades, right, for study purpose. So we'll be going through this right here. Don't worry, the annotations will make a little bit more sense to you once we scale through to the lower time frames. Right, so today I was looking at price switching for this buy side liquidity, and we've had this quick expansion to the upside, creating this bullish fair value gap here. Alright, so we had a sell side liquidity here in the lower time frame. So I want to trade the time window of 9:30. That's where I want to trade. That's why I'll look for my trade entry at the 9:30, after the 9:30 opening bell, or just at the 9:30 opening bell. That's where I look for my trade entry. So if we scale down to the 30 minutes time frame, so you see that this bullish fair value gap also overlaps with the 1 hour bullish fair value gap. So I can just build a framework of a bullish bias in this case here, looking for it to trade to this buy side liquidity just right here. Alright, so in the 15 minutes time frame, so just in my time window, I saw this swept this buy side here, but there was no bearish fair value gap just at this point. Right, there was no bearish fair value gap, but what can confirm this entry is you see how price respects this high here, this 15 minute buy side liquidity here. The body of the candlestick stays below that. You see how the body of the candlestick stays below that. So this becomes more like a mohawk, a fake out move. You can also call it a turtle soup. It's still very okay, right? So we'll see the price action behavior just at this point here, how price behaved and how I got in. This just happened right at the 9:30 opening bell, just here, just right here. So we'll see that clearly. So you see this sell side right here. So just once it took out that sell side liquidity right here, it reversed once it took out that sell side liquidity. And you see how this is just a wick here in this higher time frame, right? So this is a mohawk. So you can also classify this as a turtle soup because it has taken out the sell side, and you see how the body of the candlestick remains above that sell side liquidity, right? Same case here. So you can trust it to go higher because of this kind of behaviors right here. So the wicks can trade below, doing the damage, causing the damage, but the body tells you the story. You see how this body stays above and inside this fair value gap, above the sell side liquidity and inside the bullish fair value gap from the higher time frame. So let's just look at the price behavior and how my entry was, just like here, just like this point here, at this point here in the 1 minute time frame. Alright, so this is just it here. As you can see, at this point in the higher time frame, all these movements you're seeing here is just a wick, and I want to engage just after the 9:30 opening bell, and this was the 9:30 opening bell here. It came to this bearish fair value gap. I did a very little position here, but then I still had to wait to see how it's going to behave. So this was the first created bearish fair value gap after the 9:30 opening bell. This is why I got in my full position and the sell to the sell side liquidity. So I got out just at this point here, right? So this is just a wick just above here. So that's this is more like a fake out, because a lot of people will be looking at this as a breakout. A lot of people will be looking at this as a breakout trend continuation because of all this movement. But I see this personally as it is going to go back to upset people that bought here, take out some buyers at this point, because just at this point there are people that are in profit. So it wants to push sell side liquidity to continue higher because we have a bullish fair value gap, and we want to see the bullish fair value gap act as strong support to price, sponsoring higher prices to this buy side liquidity right here. So entry was just here. So missing out, you have gotten here. So it would look just like this. So this a perfect textbook play of the 2022 model after a sweeping buy side liquidity in a bellwether time frame like the 15-minute time frame. So you can target the sell side just below here. The stop loss can be above these highs, or you keep it at this bearish fair value gap. So this would just be a perfect example for the 2022 model, right? So just after purging the sell side liquidity here in this bullish 1 hour fair value gap, as you can see, let me take it here so you see it perfectly. In the higher time frame, this body here you're seeing here is just a wick once it displaces higher. So initially I wanted to see it use this as inversion after purging the sell side liquidity with this bearish fair value gap, but it failed and used it outside this time window. As you can see, as I've extended it to this point, you see how it used it to support price go higher, but that is outside my time window. From here, from this TP here, this first sell side that have been taken, I'm already out, because just at every sell side or buy side we can anticipate a reversal, right? So this was my trade for Wednesday 9th October, and I watched this play out to the buy side right here. So for the opening range gap, we had a small opening range gap, very small opening range gap, but we'll not consider that because you don't really need to have everything in your chart at the same time, but you also need to check how it is. So we had a small opening range gap, but this is the model here in play. My entry will just be here, and this is a 1:8. So this is the model here in play. Bearish fair value gap drop to sell side just at these pillars. At this sell side here we can anticipate a reversal. This becomes an inversion because we have the candlestick close above that. Once it retraces back to this point here, we can take a buys from here to the buy side if we built a framework of price being or going to be bullish. So we can take a buys just at this point, targeting this buy side here, but this is really outside my time window. So the buys would be here. The stop loss would just be below this inversion fair value gap, and this buy side liquidity would be the target. Even if it went a lot more higher than that, right? So this would be the target right here, and this is how the stop placement would be, just below this inversion. You don't want to see it trade below this inversion here. So just at this point, if we took out this sell side liquidity here, if you're looking at this here being the inversion, this particular one here, you see how it broke lower at this point. If you were looking at this bearish fair value gap being the inversion, see how it broke lower at this point, continue to the sell side. So this would have been another opportunity to engage in the buys, but this is outside my time window, so I'm not really interested in this. But this a perfect model if it happened in my time window, just as this is a perfect model too. So to make this particular sales more stronger, if we had a bearish fair value gap from the higher time frame, like the 1 hour time frame, would have supported it to be a high probability model for me, but it's still a higher probability model because it took the buy side from the 15-minute time frame, the higher time frame, right? So that's still pretty cool. Okay, so that's it for today for my study playlist and review. Till next time, have a lovely trading time.